people saying, hey, I'm a student researcher at some lab at some school and I'm looking into AI. Let me go choose distributed training, decentralized training instead of buying some OpenAI credits.
You can track on shoots like how many tokens are being processed per day, including the traffic that's coming through OpenRouter. And that number has ticked up from like a month ago. It was processing like 20 billion tokens. Now it's at like 55 billion tokens. I don't know how to frame that on a relative basis versus like ChatGPT has like 400 million DAUs and like obviously I don't know how many trillions of tokens they're processing per day.
What's up, everyone? Welcome back to Shoot the Shit Pod number 4. I'm your host, Matthew Nay, and I'm joined here with the whole Enterprise team, Dylan, Andrew, Chris, Sunny, and Kinji. And today is May 2nd. We have a loaded agenda where we're going to talk about some macro, ETH scaling the L1, AI and Tau subnets, some stablecoin news, DePIN corner, and a little bit of Hyperliquid news at the end. So to set the stage for the month of April, we're officially a month out from Liberation Day. The S&P is up 2%, but if we look over at crypto, Bitcoin's up 18, ETH up 3, Solana up 28, Hyperliquid up 82%. So I'm going to kick it off to you guys. How are we feeling? Looks like some tariff news is falling off. Looks like and the question is, are we back? I think everyone's asking that. So what do we think?
Yeah, I feel like the last few times we talked, I remember we first mentioned we were initially skeptical of the like BTC decoupling on any like short-term time frame. And since then, BTC only had like, but by the first time we talked, BTC only outperformed for like, this was like probably for one weekend. So it was like a bit hard to read into there. Now that we've pulled away and in some sense, we've like front run a lot of the TradFi strength, it does seem more sustained and it does seem like a bit different from moments in the past where we might have like uncoupled for like a weekend, a low liquidity weekend. But like with basically an entire month of outperformance, it seems a bit more real. I think TradFi strength in itself is like a very interesting thing to look at. We've just started getting some like more positive trade headlines, some softening from China, some like talks about what they're offering on like reducing the impact of like fentanyl coming into the US. And it seems like the market stocks generally are pricing in some very rosy assumptions about what will happen to tariffs, like almost as if we're pricing all of them to like be rolled back. But on the other hand, Q1 earnings were like pretty decent so far. Q1 earnings were okay. Jobs numbers were okay. Obviously some soft data was like unsurprisingly bad. I think most people are like bit in disbelief about how consistently strong the S&P has been. I think we're on like a 9-day win streak, which is like historically very statistically unlikely. And just reclaiming those like pre-Liberation Day levels is pretty significant. I'm like personally, I'm finding it hard to buy how stocks can be trading at like 22 forward multiple with much lower earnings growth than like 1 and 2 quarters ago and much more volatility around those earnings and what those earnings are going to look like. But it seems like BTC is largely like front run this move in stocks. And I think that has surprised people on both ends, like on the TradFi side and the crypto side. I don't know how that's going to continue. We might just I wouldn't want to like fight the tape in that sense. But yeah, I don't know. What do you guys think?
I was just going to say, I think like strong numbers right now don't mean much. Like the damage is not going to be done till basically this quarter going forward. So we're not going to really, I think we'll start seeing it near the end of this quarter, but like we won't see like terrible jobs numbers until then. Like I think we're seeing the reports like the boats are empty, like corporations can't plan ahead on spending. A lot of them are expecting a recession. There's just too much uncertainty and chaos for them to make a decision or to make long-term decisions. So I think like we're going to see a recession probably in the next quarter or so. And like I think optimism, like you said, it's like people have very rosy expectations. Like I could see some deals being struck. I don't think there's going to be a lot of favorable action towards China. I think the idea is to exclude China from the international economic system and then basically move manufacturing to other countries like Vietnam and India. I think the idea is to strike all these deals, have these countries exclude China or minimize their trade from China in order to strike a deal with the US. And I think like that's going to cause lasting damage for next, I don't know how long, but short to medium term. So I think like there's no like really bull scenario. It's just like striking a deal with most countries. But like China is like, I think in the president's mind is like targeted as like needing exclusion.
Yeah, I think it's pretty layered. Like you said, there's probably a lot of real damages that have been inflicted from these tariffs. It's almost like there's like multiple metas right now. So there's the headline meta, which is how these tariffs are going to resolve, like what happens between US and China. And it seems like the market has gone pretty optimistic about what happens there. And to be fair, news does seem like it's trending in the right direction towards a clean resolution. I think it does pose a little bit of a risk in that, one, things might not resolve as cleanly as we expect. And two, if they do resolve cleanly, it kind of forces everyone to kind of like face and deal with the sub-meta that's slowly creeping up, which is, okay, how much damage has been done to the economy? How are businesses going to react to this? What type of a market paradigm are we in? Are we heading towards recession? And that could be bearish, I'm not sure. Although it does look like, at least this quarter, things are still pretty okay, pretty stable. But then there's like, I guess for crypto, even deeper, like how BTC is going to react in this new paradigm. And that seems completely up in the air. And I actually just released a report as of recording, historical correlations between BTC and other asset classes. And it's kind of tough to say when you look at what's happened over the past decade, how Bitcoin is actually correlated. I mean, it does seem to show like the most consistent historical correlation with equities, particularly post-COVID. But when you look at like when things get really wonky, when all these different asset classes like gold and dollar bond yields are moving in different directions and there's wide dispersion, Bitcoin does seem to perform fairly well in like the two case studies that I can think of, which is, the 2023 regional banking crisis that occurred post SVB, and Liberation Day BTC also did pretty well compared to stocks. Gold did well, the dollar weakened, the S&P didn't do great, but in both of those scenarios, BTC either showed pretty impressive relative strength or just simply outperformed to the upside. And so it's kind of tough to say where everything is going to end up for crypto. I would say I'm probably disproportionately, or I feel a little bit more bearish towards alts than anything. I think at least some of the stuff that we've seen seems to be just regurgitations of past metas. Like there's House Coin, another pump fund, Trenches Coin running to 100 million or so, which is great because, none of them have done that in a while, but it doesn't seem like anything new and exciting is really happening just yet. And so I think for now, it's kind of a BTC game in terms of how BTC performs respective to everything else that's happening in macro land. But for now, at least, seems like it's somewhat safe to come outside and play. Like there's some alts activity happening. BTC just hit 97K, almost breached 98K. There's been stuff in the past that we've seen run up again with Farcoin and Hyperliquid. There's some new coins that have been floated around. I know we'll talk about some of the subnet stuff later. But for now, it seems like we're in this limbo state where until something clearly resolves, everyone is just tentatively bullish again.
Yeah, I guess on the point of correlations, like I started buying back some BTC in the like low 80s because I could buy the tentative like thesis that we're kind of getting more correlated to gold. It's a bit weird now because gold local topped like about like a week ago and BTC has just been trucking since then. Obviously those correlations like are in flux all the time, but I guess my main gripe is like assuming there's some continued bear case plays out like Dylan was talking about, like it's not really reflected right now and maybe people are trading more this like directionally things have gotten better from when they were at their peak of uncertainty and peak negative news inflows. I wonder what happens, like do we recorrelate or recouple on another equity down move? I don't know. I don't have a strong opinion there. Like I kind of just rather own BTC and gold versus anything else right now. And then on the alt side, like in one sense, like I kind of agree with you with the like just being a BTC game, but from the lows, like we have Sol up 40+%, Squeeze up 80%, and Hype's up 90%, while BTC and Ether up like 25, 28. So it's kind of funny that like the quote unquote consensus port of BTC and Hype have actually done pretty well. I don't know what that means for like broader like on-chain stuff and for smaller cap alts, like I would prefer to continue to stick with what's working, and that's kind of like hype and the few other on-chain things that have been doing well that you mentioned.
Yeah, I feel like those things are hard to ignore. Like you see it happening. I know the sweep move caught a lot of people by surprise. So it does seem like there's just still latent capital floating around for these alts. And again, they're not very liquid. And so it doesn't take much to send things up like 30-40%. But I guess to me, it doesn't seem that far removed from when everything turned really bad and what's happening now. And so maybe this is just almost like, I don't know, muscle memory, like when fishes flop around after you bring them on land. Like people are just doing things because they remember what they're supposed to do or what they did a couple of months ago. And that could be fake. I mean, I do think, like you said, it's probably easier to see things getting bearish than it is getting bullish. But I will say that if this trajectory works out, if Bitcoin really did front run the move, if Bitcoin continues to show strength against gold as well as strength against equities, while everything for a prolonged period of time, while everything is basically shitting to bed and volatility is very high, that is probably the best case scenario for Bitcoin, maybe potentially ever, that we've seen. And so it does feel pretty exciting when you view it in that lens. But I would say from a pure probabilities perspective, it seems like things are probably more inclined to go to get worse.
Yeah, I feel like if things get worse and Bitcoin does well, then like that validates the whole Bitcoin thesis, right? So I think like Bitcoin, it's either truly a hedge against everything else, or it's just like there's expectations that like economy goes in recession, like Fed lowers interest rates, M2 supply expands, Bitcoin goes up in tandem everything else. So like I think like things actually seem to be looking good for Bitcoin. Of course, that could change at any time because I think conditions are very uncertain, and I'm not sure like what the market's really thinking in aggregate. But yeah, I'll double down. Like I think things are going to get a lot worse before they get better. I think it's pretty clear that like those within the administration, whether they support tariffs broadly or not, internally, like they do support containing China to some extent economically. And like we're seeing reports where China's like threatening the rest of the world to not like strike deals with the US that exclude China, that like the US should not be acting unilaterally. And like I think that's signaling a lot of panic from China's end, because China's a lot more to lose than the US does, since they're an export focused economy. They have way too much capacity, industrial capacity. This could be a significant reversal. So I think the US has the leverage over China, and like they're gonna exert that right now. And like there might be some short-term gains or losses that I think are pretty much guaranteed, even if we strike deals with most countries. And yeah, I think like aside from BTC, like we might see a few other crypto assets. I think Hype, ETH, Sol can all like rise in tandem if Bitcoin's really perceived as a hedge. But yeah, I think everything else is just very uncertain. And I think the only thing we could really monitor are those majors.
I was just going to say, am I the only one who, like, how would you say it, thinks that it's easy to talk yourself into a bull case, right? So if you say, okay, let's say tariffs ease, China and US strike a deal, we have like not, okay, and then that helps the growth story over like the next couple quarters. You don't have to get as scared. Like growth is slowing a bit, but we had PCE come down, or like a lower print. So you can start to think about rate cuts and eventually getting those cut, and maybe even turn the money printer back on if things get really bad. And so if you said like next week we get dovish Fed, China deal, like it feels like we should run up to, past 100, at least retest 100. And then it also feels like people are largely sidelined a little bit. So if you look at how we were all positioned when we were at 98 last time, we were probably fully risk on, versus now I think we all have a lot more stables. So like there's a lot more money that can go in if you get those confirmations.
Yeah, it really hurts when you watch these moves and you're not a part of it. And I can tell just from scrolling CT that a lot of people are sidelined. Won't comment on if I am, but I think if you're like it pays to have some skin in the game for these moments, because things can change so fast. And yeah, like you're almost shooting yourself in the foot if you just ignore history, which consistently tells us like when the S&P makes these moves, like buying the dip almost always pays off at some point. And for alts, like I know for me, watching that 30 cent to dollar move on FART really hurt. And so I can imagine that people who maybe took some money out watching everything go up now, maybe they're just stubborn and will refuse to participate until they feel like it's perfectly safe to go outside. But yeah.
I remember the same sort of disbelief like post-COVID move. And obviously these are two like wildly different scenarios, but in terms of like positioning washout and then people being sidelined and then having all these fundamental reasons that you can point to as to why it will get worse, like, oh, like this is literally the worst recession we're going to have since the Great Depression. Everyone's out of a job, blah, blah, blah. There's literally infinite reasons you could point to as to why things would get worse. And, the Fed, and then on the fiscal side, them, turning on the printer just overwhelmed all of those reasons. And here, obviously, we don't have a supportive Fed right now. I would say the fiscal side, despite the Doge narrative, it's like we're probably going to spend even more money. We're like doing like wartime fiscal deficits. So like that maybe that's something you could point to as like, oh, this is a reason why that might overwhelm some of the negative growth hit that we get from tariffs. And then people will use that in hindsight to rationalize why we V-bounced off the bottom. I don't know. But I do get the same type of like cope and like sidelined vibes from a lot of people because it's really tough to rationalize when you see all these negative things coming forward. I don't think they're the same scenarios for sure, but positioning wise, it does feel like that. So it's an interesting spot.
Speaking of one asset that really hasn't caught the news that we're back or caught this run up, ETH only up 3% in the last month since Liberation Day. But we did get some good news, I guess, from the Ethereum Foundation last week. And their objectives for the next 12 months are scaling the Ethereum L1, scaling blobs, improving UX, which I guess could be a problem the whole industry could really focus on. But we saw Base become a stage 1 roll-up. So we're really getting more into the conversation of should Ethereum focus on scaling the L1? And what do we think? Is this bullish? Is it too late? And how do they go from here to really get the narrative back to being positive ETH? Because we've heard the last 2-3 years that everything else that's been really bullish from crypto has been everything else in other ecosystems. And so what do we think about the news from the Ethereum Foundation?
You're muted, Dylan.
I think this is what everyone wanted to see. I think, like there's been a lot of pushback against ETH's strategy just due to its performance. So like, I think originally ETH was planning like sharding, like doing more parallel type chains, and they've transitioned to the L2 roadmap. There's like a lot more concerns over L2s eating into ETH's value, that they might be parasitical, that they are kind of just siphoning off value. So I think people want to see ETH start to compete, start to look more like Solana, have those fast transaction times, be highly performant, kind of go back to the original vision. And the hope is that that's going to, change course for ETH, so to speak. I think this is the right direction. I think it really is a matter of execution. Like, can the Ethereum Foundation actually make this new vision a reality? I think there's tons of talent behind Ethereum. They've also been at it for a long time. There's been tons of politics and chaos and volatility. So, I don't know if the energy is fully there with Ethereum, but I think this is definitely the right direction.
I would echo some of that. So I definitely overwhelmingly positive. It's like what people wanted. Obviously, like we don't know exactly what the plan is or like how long the execution will be, but I think it's mostly what people wanted. I do think that it is much more of kind of like plugging holes in I don't want to call it a sinking ship. It's like stopping the bleeding a little bit. But I don't know if it's enough to like win back use cases that have left Ethereum. So mainly I see it as recapturing value from places like Arbitrum or Optimism that are just kind of general purpose L1 or L2s that haven't really found a unique differentiator. But if you look at where a lot of volumes and activity has gone, so I'm thinking Base has a lot of like majors volume. Hyperliquid obviously has perps. Solana's won the memes. I'm not sure. I don't think those use cases, even if you scale the L1, go back to Ethereum. Like Base has a distribution advantage. So anyone who's trying to arb like on-chain AMMs, getting a free transfer from Coinbase is massively beneficial. ETH doesn't have that advantage. Hyperliquid perps, obviously, if you're building an order book, you need some sequencing in there. ETH L1's not going to want to be that opinionated, so they won't win that back. I think the Solana meme coin one is the only one that's kind of up for grabs. If ETH can get as performant, there's already a ton of capital there, so you could see that ecosystem come back a bit. But at the same time, all of the mindshare on memes is on Solana. Is there anything that's really strong enough to pull it away from there, assuming you get close to parity in performance? So yeah, I think it's like a stop the bleeding, not necessarily like a we're winning these use cases back kind of move.
What do you think about broader DeFi on the Ethereum L1 though, Kinji? Because it's like I don't think there's been a clear winner there yet in terms of everything that you might want to do on a general basis when it comes to DeFi, restaking, lending, depositing, making basic AMM swaps, and just holding your assets potentially somewhere. Like it seems like everyone almost wants to do that on ETH. It's just been so untenable over the past few periods.
Well,
I don't know. Like, do you think? Yeah, go ahead.
I was going to say, like, the majority of that stuff has stayed on ETH, maybe outside of swaps. So, like, that's still where most of the lending happens. Like, liquid staking's bigger there. Like, fluids on, or some of them have moved to Base, but a lot of it is still on Ethereum. So, Ethereum's still winning that. And I think if you scale the L1, it just helps keep those things there. Like, some will transition to Base just because that's a growth opportunity, but the majority of value still happens on the L1 in the EVM landscape, and maybe we can keep it there a little longer. Does that answer the question?
Yeah, I mean, I feel like Ethereum still has that TVL advantage, that perceived security advantage, where like if they really could rival their L2s in performance, which is a big if, like I don't see why they couldn't quickly just siphon off all that market share and get DeFi back on Ethereum, right? Like, you know, it wasn't all of Ethereum DeFi on Ethereum until the L2s emerged. So I don't think like it's an impossibility. It's just, again, it's like that's a lot of execution, and like there's a reason L2s emerged in the first place. So like this is going to take a long time if they can get it done.
Yeah, I've thought about this from the perspective of ETH, the ETH L1 being sort of like a central liquidity hub for all of your on-chain activity. And so what is your first destination after you on-ramp? Like I've been speaking to some crypto users in China who tell me, like most people in China, they'll on-ramp in whatever method they want to use, whether it's through like a centralized exchange or otherwise. And they'll basically move their assets to Tron. And that's basically where they begin conducting their operations. And like recently, I mean, I haven't on-ramped specifically in a while, but if I were to on-ramp like a significant amount of money on-chain today, I'm not sure where it would even go. Like, I'm not sure where I would consider sending it. And the truth is, like, you don't really need all that many L2s, at least in my view. Like, I think you have a few performance maxing L2s like Mega ETH. You have some L2s that could provide like synergies for corporations or centralized exchanges like Base. You know, maybe you have some app chains. But otherwise, like, where are you going to keep most of your money after you on-ramp? Where are you going to idle most of your money? Where are you going to be lending and borrowing and then sending things to other chains to do whatever it is you need to do that needs, you know, low latency, high throughput, low transaction costs? I think there's a chance that we can see that use case return for the Ethereum L1. I think that's not a bad use case to try to win back. And yeah, I mean, no one hates this announcement. Like everybody wants to see this. Like even people who are, I'm sure, like ETH bears or spent the last few years flooding ETH. I'm sure they think this is a positive development across the board. It's been great to see. I think my favorite part though is the Ethereum Foundation tweet, which they posted on April 28th, where they said that they were going to scale the L1, scale blobs, and improve UX. They also explicitly stated that that's their objective for the next 12 months. And 12 months is fair. 12 months, I think everybody is okay waiting 12 months. I think when you start throwing 2027s, 2028s, 2029s in there, people kind of lose interest. But if you're focusing boots on the ground, trying to ship over the next 12 months, you know, I think that's a good enough, you know, stepwise improvement from how Ethereum has been conducting business in the past that hopefully becomes a trend. And that would make me pretty bullish on the ecosystem again. But yeah, like I think for me, I would love nothing more for the L1 to be more performant. I think as a user, I'd love to idle my funds there because that's just what I'm used to doing and what I'm comfortable doing. And so I would love to see Ethereum win back that use case.
Yeah, I completely agree with you. I mean, I think you just hit the nail on the head, which is Ethereum is like probably the best place to hold your funds just because of the decentralization. It's the best place for settlement, right? So like it's not going to get rolled back, right? It's probably the most secure chain. So I think like those use cases are probably its biggest advantage at this point. And I also think that this entire move and them scaling the L1 in this way within that shorter amount of time than they previously like made announcements for. I think it's really also just a strong narrative thing because ETH has gotten this reputation for moving very slowly, not being that BD focused, not being that business focused. And if they can bring back that, then all of a sudden there's hope for the chain and for the future of the chain where there might not have been before because everyone was kind of like, all right, we don't really know what they're doing. So I think that combination of being the place for settlement, being the place for holding your money, being the place for lending, and then also making moves towards just improving the L1, having a better business plan. I think that's all really bullish for ETH.
I actually think the most interesting part, sorry, Matt, real quick, is like, can you get enough activity to get ETH deflationary again? Because, okay, then you have demand for the asset. And if you look at a lot of activity on ETH outside of just like swapping on Uniswap, a lot of it is just built on the back of people want to hold ETH, right? Like liquid staking, restaking, both denominated in like people wanting to hold ETH, lending to a certain extent if you're using ETH as collateral. Like, so if the more people you get to want the asset, like the more attractive those use cases become, and you get almost a little flywheel. So to me, that's like the main thing that matters is, do you get enough to get deflationary, justify that monetary premium? That's where it's fun.
Yep, agree with you guys. It's good competition, and then if ETH L1, which started off all these the smart contracts, that'd be good for everybody if we get more competition from the Ethereum Foundation. Let's keep it going with AI. I think, Andrew, you wrote a report on Subnets and Tau. And if we look at price performance, Tau's been up 76%. We also saw the Noose raise $50 million led by Paradigm, raised at $1 billion valuation. So what's going on with the AI landscape? I know there's some debate around decentralized training. Is it worth it? Is it hype or not? And so what do you see in the report? And then what are we seeing from outside Tau in the Noose from the valuation at $1 billion?
Yeah, I think the Tau outperformance recently has been like pretty underappreciated by the market, and the subnets themselves have been like in their own little bull run for the past month or so. I covered Rayon Labs, which runs 3 subnets on BitTensor, 64, 56, and 19. 2 of them, 64 and 19, they're just like focused on inference, and a lot of their demand right now is flowing through from this service called Open Router, which is basically like allows you to tap into a whole bunch of LLMs that you might be using through APIs anyway. Puts your billing in one place. It can route inference requests to different model providers based on cost or speed or uptime. And generally it's just like a nice bundling service. So like if you're using ChatGPT, you're using Claude, or you're using some open source model in combination, and depending on what you're doing, you want to route a specific inference request based to basically, save money per token. It's like a very nice interface to do that. And Shoots, which is Subnet 64, is one of the model or inference providers on Open Router. And so they've been getting a lot of usage there, mainly because them and another subnet number 4, they offer some of these open source models like DeepSeek for free. So obviously for these like some of these third-party apps, you can look on the website because you can see which apps are tapping into which models. Like you can go to the DeepSeek v3 model and see which apps are using this specific API and these endpoints. They're using it because it's subsidized, and versus the centralized providers, you just pay a ton more. So they're getting like real world usage, but obviously the pricing is a huge component of that. They do have some usage right now directly through their own API as well. But my main point in my piece is that we'll have to see like how much of that demand stays once they eventually switch to paid. For now, all of these services are free, so which is like pretty awesome if you want to access some open source model. And then the third subnet that they run, it's called Gradients, which is focused on training or fine tuning. So the example I used in my piece is, say you're some manufacturer, you produce some product, and you want to train a vision model to recognize your specific product and to recognize your product when it has a defect. Obviously, if you go to like some base LLM, like base vision model, they're not going to recognize your specific product. But with Gradients, you could like theoretically upload a data set of images of the defective product, and you can have a BitTensor miner basically fine tune a custom model that you can use immediately afterwards. And the pipeline with Rayon is basically like theoretically a user can fine tune their own model on Gradients, which is 56. They can get that model hosted on Shoots and tap into it through their API. And then if it gets a lot of usage on Shoots, they might host it specifically on 19, which is also an inference subnet, but they focus on speed. So they only offer like a few models, but the models they do offer are like really fast. So if you put in an inference request and your model for whatever reason, or your app for whatever reason needs like really fast throughput, you would use 19 over Shoots. So that's kind of like the flow through of Rayon and their subnets. It's like you do the training on 56, you host the model on 64, and then if it becomes popular and people need it, like they want it, the extra fast version, they get it hosted on 19. And thus far, Shoots has been like the most successful based on market cap. They hit like a 9-figure market cap recently. And because of that, because of the way daily Tau emissions work, it's like the most successful alpha tokens basically get the highest percentage share of daily Tau emissions. So right now it's like very attractive to be a miner on Shoots or Gradients or 19 because they're getting the largest chunk of those emissions daily. And so theoretically, the miners on these subnets, they're doing all the compute. They're paying for the hardware that runs this compute. Theoretically, they're getting paid in alpha tokens. They probably have to sell those to pay for their real world expenses. But right now, with the tokens doing well, they can afford to offer these services in a subsidized manner. So my whole point was like, this is great. It's getting real world usage. We will have to see how the demand maintains or falls off and once they switch to paid. So interesting stuff to watch. It's nice that we have some like products that are very consumer facing and like you can see real world usage. A lot of these AI apps are using the models hosted on Shoots for like character AI type apps where you like chat or like role play as like some character. I don't know how like legit the apps are, but some of them are like coding assistants. But it's like cool that people are using like this decentralized infrastructure and it's like functioning at scale. So yeah, we'll be good to follow going forward.
Do you think, Andrew, that the Tau friction is like bullish or bearish? Because I think like the majority of people in crypto kind of look at it as this like black box. It's very opaque. There's a lot of stuff going on. It's almost as if the people who are like participating in this, like both the builders and the investors, are like removed from the rest of crypto. Do you think that ever changes? Or like is it kind of bullish that it's been kind of insulated from everything else?
I think it's really tough to understand for the most part. And so most people won't want to take the time to understand it. In that sense, is probably earlier than trying to buy the like next L1 trade or something like that. Like I'd rather buy a subnet token that has some real world usage and has like future value accrual plans than some random AI token that's just on chain. And yeah, and like I think Tau benefits from having attracted people from completely outside of crypto. And that makes it both harder to understand because there's people with like deep technical expertise on the miner side. It's like an edge, but also makes it harder for the average on-chain investor trader like to really dig into it and understand what it's about. So yeah, it's kind of a double-edged sword there. It's like it hasn't stopped people from buying those alpha tokens, but you know, it's probably not the same cohort as like people trading on Sol.
I think it's pretty bullish, at least for me, that like typically with stuff within crypto that is trying to build something within a broader use case outside of crypto, people who are like intellectuals or people who are researchers or people who are part of the non-crypto side of that industry typically look at the crypto products and they go, this is bullshit, this stuff sucks. But at least when it comes to AI, I think most AI researchers that I've seen have actually taken a decent amount of interest in it and they've looked at it and gone, yeah, this is actually really cool. And so it seems to be happening that way on Tau too, which seems to be pretty exciting.
Andrew, how is that real world usage compared to like the Web 2, the Open AIs, the Geminis? Like you say like we're seeing like real world usage and stuff. So what percentage, I know it's probably minuscule with just Open AI's growth, but how would you compare it? And like, are we crossing the chasm enough that it's comparable? And where do you see people saying, hey, I'm a student researcher at some lab at some school and I'm looking into AI. Let me go choose distributed training, decentralized training instead of buying some Open AI credits.
Tough to say. I mean, you can track on Shoots like how many tokens are being processed per day, including the traffic that's coming through Open Router. And that number has ticked up from like a month ago. It was processing like 20 billion tokens just a month ago, and now it's at like 55 billion tokens. I don't know how to frame that on a relative basis versus like ChatGPT has like 400 million DAUs, and like obviously I don't know how many trillions of tokens they're processing per day. So it's not in the same ballpark for sure, but it is cool that it's like getting some traction as a, you know, some real world usage. I feel like it's not even fair really to like compare the two. It's just obviously OpenAI and Anthropic have just like accumulated millions of DAUs that are not going anywhere and probably pretty sticky for the most part. But I think crypto can like succeed on the edges and the margins of like, it might appeal more to these like third-party apps that are trying to do something and they're trying to do it more cheaply and doing it in a way that's not gatekept by or possibly censored by these like centralized parties. So
I was just going to ask, like, do you have an issue with like all the alpha subnets or the tokens being denominated in Tau? So you basically, like, when I was looking at my shoots bag a little, one of the subnet bags a little, and I was like up in dollar terms but down in Tau terms. So like it was all Tau beta to a certain extent. And I guess, do you think there can be meaningful outperformance of a single alpha token versus like the wider ecosystem or just Tau?
I haven't like fully thought this through, but my initial take is like one of the lead devs for Rayon was like on shoots, they actually had like kind of an oversupply problem. So like because that DeepSeek model and Open Router was so popular, like you have a bunch of BitTensor miners that are like set up to run that model. Like they host it and then they're competing to like serve those inference requests. And he was saying like they're kind of oversupplied. And in that sense, if they're getting paid out in the alpha token and they're paying for real world expenses, they naturally have to sell the subnet token. And they were saying like when they switch on paid usage, like obviously some of that supply is going to fall off, but that should be net positive for this like excess selling of the subnet token. But versus Tau, it's like, it's hard to say whether in the long term, like say your subnet is successful such that it is attracting all of the emissions and you get like too many miners that ultimately like have to sell the subnet token because they're just all competing for those emissions. I don't know if it's like self-fulfilling or like, I don't know if it's a subnet succeeding kind of like sows the seeds of its own, not demise, but like there's some mean reversion there because it like attracts too many people who want to sell the underlying. Yeah, it's a good question. Like long term, we'll have to look at like how dependent is subnet token performance on Tau itself? How do miners like move around between subnets when Tau is like not performing well? I think there's a lot of questions there. We'll have to see, especially with shoots. Like shoots will be a good case study, especially when they move from this like subsidized regime to paid, and we'll see like maybe emissions stop, trickling there as much.
I like it. Let's kick it over to DePIN quarter so we can fit it in. I know we didn't have time for last episode and get our resident DePIN Dylan in on the action. We saw some really bullish announcements from Helium and XNet on some AT&T partnerships. So what does that mean for Helium and XNet? And then also anything else happening in DePIN that you're really excited about, Dylan?
Yeah, so we saw in the last month, both Helium and XNet announced that formally that they are partnered with AT&T for carrier offload, which basically means that AT&T is using their DePIN networks to offload their own subscribers when they don't have coverage. So like I think like the understanding is that these partnerships have been in effect for a while. They weren't able to formally announce them until fairly recently, and it's a pretty big stamp of approval that AT&T is willing to come out here and put one of the largest companies in the world's name and brand on these DePIN protocols. So I think it's mostly symbolic. It shows like we're making real progress. It shows that we're filling real demand to some extent using DePIN. And I think it's like a great symbolic victory for the space. However, there's still a lot of real growth that needs to happen. So the extent of these carrier offload programs aren't very large yet. They're positioned to grow significantly in the coming years, but there's not a lot of revenue actually coming in yet. So I think it's a good sign, and we really just need to capitalize on these kinds of partnerships now and then keep growing them, start going international. And I think we're validating that DePIN works and the largest companies in the world can use it. I think kind of a tie-in, something we saw recently was Solana point out that over $400 million worth of token rewards were distributed to infrastructure providers on the supply side in 2024, which is a considerable amount, right? So yeah, these are just the token rewards for contributing infrastructure, but it shows that we can actually incentivize devices to join a network. Now, the big thing is, again, we need demand, we need revenue to actually catch up and fund these rewards. So we saw maybe 50 million in revenue across DePIN in 2024, and then 400 million in rewards distributed in Solana. That's an 8x ratio, and that's not even taking into account other chains. And even if most of this revenue accrues to token holders, and I think it is token holders that are funding most of the rewards at this point. So again, we have a lot of growing to do, but we're seeing real activity, we're seeing usage, and I think the signs are very encouraging. This was the DePIN Corner.
Well, I was going to ask about, we saw an announcement from Fuse Energy. And so I know you're really bullish on Glow and some of these energy products. So what are you seeing in the energy landscape? I think they saw where they're able to do something with your EV charger in your home, like the Tesla EV charger. Correct me if I'm wrong on Fuse Energy, but yeah, what do you think with the whole energy subsector of DePIN? I know the Solana Foundation, some of the like framework ventures, I was on a panel with them last week, and they really mentioned Fuse and Glow as two projects that they're really excited about.
Yeah, I think energy is one of the highest potential sectors within DePIN. It's a very early stage of development, so a lot of these networks don't have like mainnets or tokens launch or like very convoluted private type trial run processes. So yeah, I think like connecting what we call DERs, like solar panels or EV chargers, I think that's a massive use case. We need real-time insight into the energy grid, especially as we transition from fossil fuels and centralized energy generation to more distributed energy like solar or wind. And yeah, I think DePIN's a great way to actually incentivize people to connect their devices and eventually give control to what we call virtual power plant operators and other intermediaries who can make the grid more efficient and prevent blackouts, make sure energy is well distributed. But again, it's like very early. There's a lot of potential, and we just need to see execution. And yeah, I think like that's the theme across DePIN. We've seen tons of really cool things happen. We've seen initial signs of promise and success, but we need things to scale, and we need things to really get going.
Okay, now it's been DePIN Corner. Let's move on to stable coins, and we got some really cool announcements. We saw there was a rumored Ripple bid for Circle for like $4 to $5 billion. Some other news from the stablecoin landscape is Mastercard linked with Circle, Paxos for merchant stablecoin payments. So now over 150 million merchants across its network can accept stablecoin payments. We also saw they partnered with OKX for a crypto-enabled banking card, and also some Stripe launches. But then, so what do we think with the payments? Is this really going to be the year of payments in 2025? And what do we think about first off, the Ripple bid for Circle, and then also these TradFi large Mastercard Visa networks kind of coming in and really launching some on-chain use cases?
Yeah, I think the Ripple bid is like kind of scary. Like I'm envisioning this future where Ripple somehow cements itself into our daily life and like by just buying out USDC. I don't know what to think of it. It's like I kind of don't think they would be willing to sell given that they were just thinking about IPOing. But clearly, like I don't know if it's the recent like upcoming legislation, but there's been just a rapid flood of headlines around stables, and companies are like it does seem like they're racing to become like just build out a network effect for themselves. And even beyond payments, like there's the custody and exchanges like Bitso. There's people experimenting with non-dollar pegged stable coins. I think they're doing a peso pegged coin because they serve mainly like Latin America. Commercial banks are trying to get into issuance, so like Standard Charter's like issuing a Hong Kong dollar backed stable coin. Merchants across the board are like trying to integrate. I think there's this company called Mesh, which is building out, letting Shopify merchants like easily accept stablecoins at checkouts. So that's been really big. I haven't seen many numbers on like merchant adoption on like e-commerce. So that will be interesting once this like tech is in place to see how much demand there is like on the merchant side for accepting this, and like who's actually coming to these like e-commerce websites and really wanting to pay from their wallet in like USDC or Pi USD. But clearly there's like a ton of competition coming in, and the headlines will probably just like keep coming here. I think both Mastercard, Visa, and Stripe are all vying for what they see as like massive TAM for just payments, remittances, cross-border payments. So obviously, as we get like more legislative and regulatory clarity, I imagine we're going to see even more entrance into the space.
I feel like stablecoins is one of like obviously the areas where we feel like crypto's found product market fit, and it's going to be a continued trend. I also think it's one of the hardest things to actually get exposure to, especially in public markets. Like if I had every possible opportunity, I think the only thing I'd be interested in is like an emerging market distributor. Like that sounds kind of enticing. But if you look at like what are stablecoins actually being used for, it's like collateral on centralized exchange. So you kind of, or not a centralized exchange, a centralized or decentralized exchange. So you kind of have to buy an exchange. Like what else is there? Payments like Visa, Mastercard. It feels like in the Western world, they'd be the winners there. Are you really going to buy that stock just based on stable coins? So it's like a fun thing to watch. It's a fun thing to talk about, but I think it's a tough thing to actually like capture.
Yeah. And I think crypto native people are like, they obviously see the narrative. I mean, it's like the most obvious narrative like out of any that we've had. And they're kind of trying to force like their expressions of their bullishness on it. Like I see people posting more about like Curve as like, it's like what else on like centralized exchanges can I bid to like express this viewpoint? And not saying that like that won't work or go up, but like ideally we'd all like to own like equity in one of those companies that are really like facilitating tons of volumes in emerging markets. Like I don't know, something like Yellow Card or even Bitso, like just whoever's facilitating all of that volume and in like a sticky way. Like they've already gotten a bunch of consumers to like get used to using them as the go-to platform for sending those payments. Like it's super valuable. And I think like traders, investors, retail investors, like we just don't really have access to the best expression of this ongoing trend, unfortunately.
I am perfectly okay with that. I'll let Visa and Mastercard figure it out. I don't think everything stablecoins has found beautiful PMF. There's been plenty of retail adoption. I don't think we need a protocol run by anons with a token trying to run this to the ground. Like I think this is extremely bullish that these are real companies that don't have tokens or an incentive to sell a token coming in trying to build like real products, and I am perfectly okay with that, and I'm very excited to see that actually come into fruition. So yeah, I think this is an okay area to kind of, there doesn't have to be a trade for everything. There doesn't have to be like a token you can buy to get exposure to anything. There'll be narrative metagames, but I'm pretty excited to see what these guys do.
One thing I'm like wondering, just on a personal level, it's like if I'm shopping online, the one downside, obviously like merchants don't want to pay the whatever 1% to 3% fees that they're paying to the payment networks, right? Or like credit card networks. So like the cost savings are very obvious, but on the user side, personally, I don't know if I want to shop with stablecoins. Like my wallet is associated with like a bunch of on-chain transactions, and like I've like to get those stables, I probably traded out of some ridiculous currency, and like I need to track that for taxes. Like, do I want to throw my purchasing into that loop? I don't know. Does that make sense? Or like I kind of view them as like two entirely separate things, but obviously there's people out there who like they view their on-chain or centralized exchange wallet as literally like I use this for payments. So it's just very different.
Man likes his privacy. I mean, I think like the only way I get excited about it is if we like the provider or the merchant is going to have to pay a ton to customers to get the network effects and like solidify that user behavior. Kind of take a little DePIN model, start pushing out tokens to bootstrap the demand side, I guess. Or
yeah, kind of going off that, what do you guys think Plasma? It's the sidechain on Bitcoin that the transactions settle back to Bitcoin, but it's only designed for stablecoins. Andrew and Sonny, you guys were talking about like how to put a trade on. I know Framework, Six Man Ventures is really excited about, and some other VCs excited about this stablecoin built blockchain. And so like where the volumes are really going to accumulate, because I know with the confidential transfers, confidential balances, the Solana network is really trying to go after these volumes too. And so like, is it better just to own Sol the token because they're going to accumulate all the volumes there? Is it better to buy Plasma token if they have one on launch, or is it kind of like what you're saying about the just buy Visa, Mastercard equity? So the loaded question, but like where is the volumes going to actually accumulate? Where are these payments actually going to settle is I think a big question. And then also just like, is it enough to build a chain specifically designed for stablecoins, or is some other L1 that's already built for general purpose going to take all these volumes?
I worry we're gonna like kind of try to force a narrative there where it's like, oh, I need to bid something that's exposed to stable coins, and maybe we don't need separate infrastructure for that, and people get roped into bidding those things. Not calling out specifically Plasma, but my personal opinion is that the centralized exchanges, and then these like the exchanges that have kind of pivoted into consumer apps, kind of like Yellow Card, like they've been the best onboarding, and I struggle to see a world where kind of like this more decentralized infrastructure that just starts up like in the next 6 months. Like what is the incentive, say like for Yellow Card in Africa, for users who have been using that platform to switch over to something that they have to learn and like figure out? It's just big switching costs there. So kind of think whoever's like doing well right now probably continues to attract more volumes. And if we make specific stablecoin infrastructure, they will either have to have some attractive like subsidy to really like onboard a bunch of people, or the service has to be like some order of magnitude better than what's currently out there. And I'm like, how would they do that? I'm not so sure.
Yeah, the crypto native pie for this is like really small and not attractive to these large players. And I mean, even if you look at something like Tron, right, which sees a ton of stablecoin transfers, it's actually not that cost effective to use Tron for stablecoin transfers. It's also like not purpose built for stablecoin transfers. It's kind of a general purpose blockchain. And so like what tends, at least from what we've seen, like what is sticky about these chains that aggregate stablecoin volumes tends to be because of convenience / like behavioral factors, or it's where you have your money anyway. Like I think those like intangible moats are probably going to be more important in the long run. And I just see the addressable market for something like that being fairly constrained and kind of difficult to sell. But we'll see. I think the idea is eventually it'll become a large enough and a vibrant enough market to where you can have multiple players win doing different things, some more niche than others. But for now, I think it's probably just going to be like who's onboarding the most users, like Andrew said, and what's the easiest thing to use.
I've always viewed payments as like the last stablecoin use case. Like if we get Onchain to be really exciting, that solves distribution. Hopefully everyone's using a blockchain, has a wallet, holds some stables, and then we can start doing payments. But for me, like that's the end game. It's probably like the biggest market, but I also think it's the last market that we win.
I also think it's a market that has like really strong network effects, right? Like you basically need to get like everyone to accept this form of payment, right? And the more people, like, especially if you're doing like B2C type of stuff, like the more people who accept it, then obviously the better it is to like go with that sort of payments. Even on the, like P2P side, right? Like you have Venmo, right? Everyone has Venmo. Cool. Okay, we're all going to transfer through Venmo. So I think it probably turns into like a winner take most / winner take all. I don't know what your guys' thoughts are on that though.
Well, I think a lot of the goal right now is like on the back end infrastructure side, they're just like, they're building it out so that merchants can accept whatever. And then I think that like the end state is kind of like merchants will ultimately get whatever payments they receive just automatically converted into whatever they want to receive on the back end. And whoever is orchestrating that, will clip like a small fee. And I think for the current payment networks, like that kind of just seems like margin compression for them. Obviously it's a big opportunity, but like on net, I think they can see how it's going to disrupt them, and they kind of want to front run disrupting themselves. And so I could see a world where things are super fragmented. It would be like mostly like, I don't know if this current duopoly just like keeps going the way it's going, or it gets super fragmented, but it doesn't matter because when you pay for something on the back end, the merchant will just receive, and it'll be like converted in a large LP to whatever they want to receive. So I could see that too. Like I could see all these issuers kind of like creating their own coin, and it's obviously like backed by short-term treasuries or these like cash equivalents, and they're all earning like a little float by doing that. And then they're like widely accepted everywhere because of that back-end technology. Both seem like kind of reasonable to me. But either way, it seems like the end state is like all of this stuff gets like way cheaper, and the current oligopoly of like payment networks gets definitely messed up. Not messed up, but like it's better. It's just better for all consumers and merchants.
That's the whole point, right?
Yeah.
This is a super lightweight model that doesn't leave a lot of room for these centralized players to come in and profit off of. It's like designed this way. And so I'm interested to see how that actually plays out. I mean, it's good that these guys are building the space. I don't want to flood them out of it, but yeah.
Do you guys also think there's a trust factor there that's going to be really hard to overcome, though? Because, and maybe I'm just not understanding this correctly, but if you're a merchant and you're going with something like Visa, right, for your payments, you're accepting that. You obviously have that kind of trust factor of, okay, if there is some sort of fraud, if there is something that goes wrong, like I'm getting comped on that by Visa, which to me, there's a high activation energy needed to switch to something else when you already have that.
I guess we'll have to see, like, say for these like Shopify merchants, how many of them like actively sign up for these things and their reasons for doing so. I mean, like besides just like, I'm not sure if the fraud prevention and like these kind of like tangential services that the payment networks provide are, I don't know if the merchants would rather just like not pay the fee and not have to not get that, or they'd rather pay the fee and have that. My vibe is like they hate paying these fees and they like often try to pass it on to consumers. Like obviously when they like, you know, if you can pay cash, they'll give you a discount, stuff like that. So, but yeah, it's a good question.
Yeah, they can save a lot of money doing this. And I think for larger purchases, and I know that there are a couple of people who have made livelihoods selling watches on Twitter using crypto. But if you think about it from their perspective, you get sent a stablecoin, it's in your wallet. You can do whatever you want with it from there. You can off ramp it, you can do whatever. That's a far better solution than like waiting for a wire transfer or, you know, having to deal with cash payments or like having a bank hold your funds. Like I think it's especially for like, so I think you can make an argument that, you know, for these high volume, like low transaction value businesses, they end up saving a lot in fees. And for like some of these merchants who are moving around more expensive products, like some of them just want the ease and finality of having their money sent instantly.
Let's go talk about some Hyperliquid news. I know there's been some stuff in there with like some new staking tiers. I'm not too familiar on. I know you guys will be, and then HIP3, and then like what's going on with the Hyperliquid EVM stuff. So what are you guys seeing over in some of your guys' favorite coin and land in Hyperliquid?
Yeah, I think that the pace of shipping from the team has remained accelerated. And I put out a tweet where I was basically trying to break down kind of the thematic undertones of what the team is shipping. And it seems to be they want to incentivize staking as much as possible from all stakeholders, whether that's builders, market makers, whales, retail users. They're doing that with HIP3. You have to have 1 million hype staked if you want to build, you know, your own third-party perps offering. It seems like they're moving more and more towards having third-party teams come in and build protocols that expand the offering, whether that's directly in the order book, like Hyperunit is doing for spot Bitcoin, spot ETH, spot Sol, or with HIP3, which will allow people to permissionlessly deploy perps as long as they meet certain requirements, like from a stake type and you know, product perspective, and then you know, moving builders through to the Hyper EVM, making improvements there. I think the pace of usage on the Hyper EVM has really expanded since launch because it was launched kind of virtually out of nowhere. Like even the builders themselves didn't know that it was going to be live, and not that many features were initially rolled out with the launch. That has since changed. More and more is coming out, and you can see that builders are really set up and running now on the Hyper EVM. And so just in general, like this remains like one of the highest velocity development teams in crypto. I think everything they're doing makes sense. It's sticking to a few core themes where Hyperliquid ends up becoming, they call it like the AWS of on-chain finance, where they basically just facilitate the platform and all these third-party teams can come in and profit off of building new offerings there. And that creates a flywheel where more and more users start using these different products. And eventually the goal is you just never leave Hyperliquid. Like you don't have to. And for like 90% of the current on-chain value proposition, which is, yo, I want to buy like majors. I want to buy memes. I want to trade these things. I want to trade them with leverage. I want to maybe deposit my BTC somewhere for yield. Eventually, maybe I might want to even like trade stocks and gold or RWAs here. That's like, I think if you want to try to come and tell me that there's something else to like on-chain business models right now, like you're going to have to prove it to me, because to me, those are really the only things that have showed real traction. And the goal is that Hyperliquid can do it all. It'll be an all-in-one vertically integrated offering where if you're a power user, you really can do pretty much 90% of what you need to do on chain there. And so I think everything is moving that direction. It's moving that direction very fast. HIP3, I think, is going to be massive. Like, it basically almost decentralizes like the perp listing process and also allows for a lot new, more innovative types of perp products to be created without the team having to get actively involved. And so I think it reduces risk for the protocol and also just expands like what's possible. So I am like super bullish. Obviously, the price action has been good. And to me, I mean, everything that they've been doing is just indicative of what should eventually be a top 15, top 10 protocol in crypto. And the numbers already seem to be reflecting that from a revenue perspective, a fee perspective. I think once we see TVL increase on the Hyper EVM, from a chain perspective, it'll even start to look more appealing. And so, yeah, all things seem to be running.
Yeah, I think like I don't have a super strong opinion on Hyper EVM, but like it's already ranking in like top 8 by weekly fees. Like the growth is there, but like active addresses are growing pretty fast. I think the way Hype is priced right now, it's like you kind of have a free call option on upside there, and I feel like it's generally kind of slept on. So I think that's positive. I think literally just on the basis of them being like top fee protocol regularly, like up there with like Tron and Sol, like on a daily basis, it should probably be priced in the top 10. Like it's a top 10 app. And so, you know, just looking at circulating market cap, moving from like, I don't know what we're at, like near 7 bill to like close to 20 bill in the top 10, I feel like is pretty reasonable. And then that's not really including much upside from these other levers that they're constantly coming out with. I would like to see which team first will be taking advantage of that HIP3 proposal, and like who's willing to go out there and buy, 20 mil worth of hype to do that. I can see some argument for, like, on the one hand, I would almost prefer the hyper core team just like be handling these like main product offerings, like the spot list, like some of the BTC spot listings and the with unit. Like I'd almost prefer them to be handling it and taking all of those fees, just because like, one, they've proven themselves to be very competent, but they're also like very much aligned with this like permissionless decentralized ethos. And so I think the fact that they like are basically splitting fees with whoever comes on the protocol and builds this out, it's a pretty strong incentive for like a competent team to do that. And I think it allows them to tap into a lot more whatever talent pool is out there that wants to build on this, and maybe that results in something that they wouldn't have been able to build otherwise. So I think it makes sense. And like I just like, they have all these levers to pull, and like I think I would just be bullish on them even without any of those. And so there's a lot of upside scenarios that are probably not being properly priced in right now.
I think an interesting question would be, would you guys rather some new team come and build a lending and borrowing protocol on the EVM? I don't know if there already is one. Or like, would you rather Aave go and spend 20 million to go and kind of build, just port over to the Hyperliquid natively and be on their Hyper EVM? And kind of, what do you see like these large players that have the money to go and do that? Or would you rather see some new like flourishing ecosystem exist on the Hyper EVM? Because I think that would be really interesting if Aave or some of these large players kind of like put their stamp on the Hyper EVM and port over. So curious what you guys think there.
I think both will happen. We've already seen it with like Felix protocol is doing really, really well. And a lot of these like crypto or Hyperliquid native teams that have built on the Hyper EVM tend to be grabbing like a lot of the community members who know these people and know these teams and know the protocols and want to support Hyperliquid native protocols. But eventually, I think it's inevitable, if this thing takes off, that you see larger players getting involved. And with the rollout of more validators, I think it was basically announced that Tethers, or an entity of Tether, is going to be running a validator on Hyperliquid, potentially launching native USDT on Hyperliquid. And so if you are a large player and you're not watching this ecosystem, I think it's probably going to cost you in the long run. And for now, like I think all the Hyperliquid native protocols are going to do extremely well, since the community members are so aligned with Hyperliquid native teams. But eventually, I do want like the Hyper EVM to get large enough to where you start seeing kind of the crypto incumbents take interest. And I will say, Andrew did touch on decentralization and the ethos of decentralization there. Like, yes, Hyperliquid is going to have 21 validators for now, 5 of them permissionless. Yes, they're all co-located. Yes, the code is not open sourced, but Like with HIP3, you're already seeing it. And on those first points, I think that will gradually happen over time where those conditions improve when shipping velocity goes down. But what other protocol have you seen that has attracted this much users, like this many users, such a large like portion of fees, and instead of like pressing their foot on the gas and trying to milk as much money as they want out of it, is opening up the order book for people to come in and build and eventually even make more profit than the Hyperliquid team itself. Like HIP3 basically allows a perps deployer to make more from those trading fees, and Hyperliquid makes running the order book. And so like to me, that is in a way like a lot more decentralized from like a business building perspective than a lot of protocols that we've seen. And they're so successful, they don't need to do this. Like Andrew said, they're incredibly competent. They could easily build out more products, grow the team, concentrate more of their fees. And I think the users would be okay with that. But like they're really taking this like infrastructure, like hands-off, third-party approach to how they're building out their offering, which I think is pretty admirable. And Hyperunit's done great. Like I think they're doing a great job, and they're continuing to do things that will be exciting, that I think will be coming in the near future. And so, yeah, I think it's a great experiment, and I'm all for it. Even if it means, 50% less fees for the Hyperliquid team on every new incremental perp. Like I think that the pool or the pie is going to grow so much larger that it won't matter in the long run.
Yep. I heard that. So let's wrap it up with the what are we doing on chain? Personally, I'm not doing a ton, but would be curious to see what you guys are doing. I know I'm playing around with some Monet testnet, collecting some XPs for some NFT projects I'm in with my favorite project, the Solana Game Boy. But other than that, just kind of monitoring the Launchpad wars that we're seeing with Jupiter just launched their own. That's currently the only thing I'm doing. So not a ton from my end, but would love to hear what you guys are doing on chain.
I'm hearing rumblings of a Hyperliquid Season 3 airdrop. There's technically more money allocated towards like future community incentives than there were in the first airdrop. So I'm playing around with perps, buying some spot Bitcoin on Hyperliquid.
Sonny, are you ever not playing around with perps?
That's a good question. No, not really. But more so than usual, I think. More so than usual. And so, yeah, been having a lot of fun there, looking at some Hyper EVM stuff, getting back into Solana trenches a bit with Housecoin, Farcoin. We'll see how that ends up playing out, but definitely getting more active.
Yeah, I've been doing perps trading on Hyperliquid and Lighter.xyz. So on the trading side, that's mainly what I've been doing. I've been continuing to be pretty active in abstract, trying out new games, doing some token swaps, buying some NFTs. And although this isn't quite on chain yet, I spent a lot of time playing Treeverse. I just had a piece come out, so I probably dedicated like 25 to 30 hours to that, which was really cool. I haven't had that amount of time to sink into a game. So yeah, that's what
What's the quick TLDR on Treeverse?
Wait, this is the Treeverse, Chris? The one that was supposedly supposed to launch in like 2021?
Oh, yeah. This has been in development since 2021. They've released certain iterations of it, like in alpha testing before, and some beta testing. But yeah, essentially it's an MMORPG, mobile first. It's a good game, I think. So my entire report was basically talking about okay, we're doing this game review series, and a lot of times crypto games get the caveat, oh, it's really good for a crypto game. So we're going to try to look at games from the perspective of a review as if they were an L2 game, as if they were a Web 2 game, and give the same type of scrutiny that we would give to that. So from that perspective, I think there's still a lot of elements missing. They haven't implemented a lot of the social elements of MMORPGs that drive the network effects and make it really fun. Like there's no PvP right now. There's no P2P economy right now. There's not like an integrated guild system. So I think that's one of the biggest things that are missing. And then additionally to that, there is kind of like a lack of depth within some of the core parts of it. So resource gathering is pretty bare bones right now. Crafting, you can kind of get away with just buying stuff at the general store because of like the price discrepancy. Like I think they need to adjust the prices a little bit. And it does get a little bit monotonous just grinding out dungeons. They don't have much of a questing system right now. But with all that said, I think there's a lot of potential there. I personally would like to see them lean into the more crypto native side. So I would love to see them do something like Cambria, where you have, risk-based models, flourishing in-game economy. I think that leaning towards crypto natives instead of trying to capture a broad broader Web2 audience would be really beneficial for them, because MMORPGs already have pretty strong product market fit with the crypto audience. And then taking a mobile first approach, it just gives them an advantage over some of these browser-based games where if you play it on mobile, there's always a little bit of degraded performance, even if you have a PWA. So I think this positions them really well, and having that second mover advantage of learning from Cambria, seeing the mistakes that they made, and then being able to integrate a little bit better into their own game would be really huge. So the overall verdict was, as of right now, doesn't hold up to Web2 MMORPGs. However, definitely has the potential, and I say the potential to even compete with Web2 MMORPGs, at least in the mobile category long term.
What's also awesome is the Apple news that we just got today or yesterday with the App Store allowing, I think it was like third-party stores are being able to link out to their own, like whatever it is in the Web3 area, and allowing NFT platforms. So that's going to be huge for them to kind of get big right around that news. That's very, very bullish for Web3 mobile gaming.
Yeah, absolutely. It's massive. And, one of my concerns with even suggesting going down the more crypto native route was exactly that it's really hard to do it on mobile. So having this news come out, it makes me way more bullish on them being able to achieve a really strong game that caters to crypto natives.
Wait, Chris, are my timeless NFTs useful for anything? I still have one from like 3 years ago.
I brought him in my wallet.
You guys
I got it. I'm an OG, man. I'm an OG. I got it drained too. The wallet was drained. They didn't actually end up taking the NFT, so I think I still have it.
Print something. Tell me.
Well, they didn't even take the NFT.
No,
that trainer's going to regret that one.
They're like, this game's a rug.
So right now, there's no utility in game for the NFTs, but the team has stated that they have plans for that down the road. Caveat there is quite obviously this game has been in development for 4 years. So I think there is an execution risk from when that's actually going to be implemented. We'll see. The team's been shipping better recently than they have been in the past. So timeless NFT, maybe not worth much now, but if they get that integrated into the game and it actually has significant utility, I could see that shooting up.
So you're saying there's a chance?
There's a chance. There's hope. There's hope for us.
Yeah, that's bullish. I think Star Atlas is on the clock now. We got to get around and start actually flying some ships around it. These games have been in development for 4 plus years. Actually launching is pretty awesome with gaming. Andrew, what are you doing on Chain?
Honestly, been pretty less active than I have been in a while. Outside of like following some subnets, more been trading perps on sexes. And usually when I'm like more active on perps for a period, it usually precedes like Onchain doing something. So I don't know. I'm just on the lookout for something new, and I haven't really seen it in this recent run up of like the few Onchain runners. Like it feels kind of stale to me, and like they've run back some of the like AI plays that were doing well back in the end of December, like virtuals and like Ava and some of these other agent stuff, which I personally don't really want to touch. So yeah, just trading perps and following some subnets until something new pops up. There are like those decentralized training protocols that have been allowing people to provide compute. I think Jensen's still actively doing that. Prime Intellect just finished a training run. So always watching those guys, and yeah, good opportunity to do something on chain. Outside of that, yeah, just waiting for something new.
I love it. For kind of us, none of us really doing a ton. This was a jam-packed episode. I love it. I know we went over, and if you're still with us, thank you. That's been awesome, and this has been probably my favorite episode so far. Hopefully that keeps going, and we're excited for the next episode. But thank you guys for listening. This has been Shoot the Shit Pod number 4, and can't wait to see you guys on episode 5. Thanks all.